Hi and welcome back to the channel. My name is Nick and today guys we're going to be talking quant. Quant is an interesting project, but today we are going to be less focused on the fundamental analysis and more focused on the technical analysis. It's been an interesting pull to the downside on quant and well, it's definitely got my juices flowing. So let's jump down into the world of technical analysis on quant. If you do find this content useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? And in doing so, you will not miss another video update. Let's jump right down into this one and start discussing things with what is going on with the price action of quant, starting things with the hourly chart. So here we have quant paired up with the USDT. We're using the BitGet spot exchange here. And guys, if you haven't yet signed up to BitGet, link is in the description down below. It's a fantastic platform. I use it for 100% of my leverage and 90 to 95% of my spot buys. And yeah, why not check it out? There's some fantastic offers available there as well. And yeah, I don't think you'll be disappointed. It's a great strategy to have exposure to as many different exchanges as possible. So why not get on it if you haven't done so already? Let's take a look at this. So we do see this slippage to the downside. Again, this isn't terribly anything unusual. I've been kind of monitoring quant for quite some time, and there's some interesting kind of structures that have my interest, and we're going to go through some of those with you today. So let's take a look. Right, what do we see? Well, we can see that we're actually in this kind of slippage to the downside. Now, it doesn't look like it's necessarily complete, but we'll go into that in a moment and find out. For the most part, we can acknowledge that we had this three-wave corrective move to the downside. We go ahead and just pull this over to here. And we can see that we actually came right down into those lows as expected. So essentially you would be right in here between the 1 and the 1.236. So nothing terribly too unusual. It's basically 92.551 to 90.571. Now the internal structure here has gone into a bearish structure. We can see that. Let me just remove the fib so we can clear this out a little bit. You can see this change of character. This essentially changes us from a bullish structure to a bearish structure. But it should be no surprise really, because that was a fake out when we had this one over here and this one over here already. Okay, so sometimes this happens, like I said, with all of these algorithmic indicators, yeah, they are going to give you the false flags from time to time. Now, essentially, we are bearish. We are below the 200 hourly EMA and below the 50 1 hour EMA. And so we have to kind of consider, okay, cool. So where does we sit? What's next, right? And so we need to figure out, are we complete here within our patterns or not? And for the most part, I don't necessarily think we are. I think what we've got going on here, and I could be ever so slightly off. Let me just check my counts here. That would be 1, 2, then this have to be coming in here to 1. Okay, yeah, so here we go. So let's start here. We can see we'd have this one here, and I think, yeah, I'm going to have to put it there, wave 4 like so. Then we'd have a nested position up here, here, and down here, up for this one, down for there. So what I'm doing, guys, is I'm just mapping out the structures so that we can be 1, 2, 3, 4, and 5. So that must be contracting in. That's cool. And then we have one more to go by the looks of it. 1, 2, 3, 4, and 5 coming down to here. So again, 1, 2, all of that being 3. Up to 4, down to 5. Okay, so that's kind of where it looks. And it would basically finish off this structure. It looks like we still have that extra little bit to go. Nothing too major by the looks of it, but just a fraction more. Let me go ahead and just check. Now, it could be ever so slightly off with that, but I think for the most part, our target range needs to be here, essentially 89.579 to 90.501. Okay, once complete, I would expect a bigger bounce to the upside. I think we're ready on the daily time frame for that, but not quite on the 4-hour time frame, and we still need corrections down and some fluctuations, some volatility on the hourly chart. So let's take this up into the daily time frame, right? So from the daily time frame, what do we see? Well, again, we're in that bearish structure. And this has been the case for quite some time. We can still see that here we've got these breakup structures. So nothing unusual most recently, a bit of a pull to the downside. We're looking for a new bear market low. The existing low comes in at 90.63. 1.31. We got close to that. I suspect we've still got more slippage to the downside. Now, obviously, as a main issue that we have here is that 5-wave count. That 5-wave count looks like it needs to take us down a little bit deeper. But from everything else that's going on here, it is still 3-wave corrections with a new bear market low at the end of it. And that would be basically from this higher range. So on the daily time frame, you can see things a little bit more deeply, and we can see this idea of actually coming down even deeper on the daily time frame. But I don't think that looking at the hourly chart that is something that's going to happen, but we'll keep it in mind nonetheless. The daily time frame here is giving us the idea that we have to come down more towards 79.665 to 84.117. So again, you can still see some slippage here, but I do think we're in the oversold area. Actually, we're more than likely going to bounce up, and we could bounce up and move back down. That's obviously something that we might experience. And obviously all of this is part of a much bigger play as well, which would have been from over here already. So if we go ahead and play this over to our bounce here, and yeah, so we could argue that that's kind of already hit its expectations. So we don't necessarily have to see too much more. We could of course do so, but for the most part, this one looks like it completed up here as well. And so this idea of coming down deeper might not be something that we experience so much. But if we do have this new low, then we have to kind of consider this a little bit off in its count. Ultimately, though, everything that we are seeing here is still looking very, very much repressed. The price is being pushed down and suppressed, I should say. And yeah, for the most part, yeah, we still expect further downside. There's no other way of looking at this at the moment, in my opinion. We still have slippage to experience here, but a bounce to the upside, I think, is coming. So if we take a look at this on the weekly time frame, again, you can still see that we're below the weekly 50 EMA. We haven't got a huge amount of data here from a weekly perspective. We do have the low from June 2022. That is quite aggressive down there at 40.1. So actually, when I talk about a new bear market low, it's obviously not the new bear market. No, it's a new local low. So when we're talking about that being down here, slipping down lower than where we were in August, what I'm talking about there is a new local low. And the same with what we have down over here at $89, for example, those will be new local lows. But on the weekly chart, we can see that the bear market low is actually from June 2022. And I do think that the low for quant, or the bear market bottom, is in for quant. I do not see quant going down lower than $40. And I do think we're just in this corrective pattern here, looking at good areas of support to be found so that we can continue the run to the upside. But I don't think we can continue that run to the upside in a bullish environment until, of course, the rest of the crypto market has actually started to bottom out itself and liquidity has come back in. And I don't think we're going to see liquidity coming back into the market until we actually see a Fed pivot. And the Fed pivot is not likely to happen until inflation rates actually start to come on down. They've actually increased. And so for the most part, we expect this to be a prolonged bear market. But I'm hopeful and looking at the data here, thinking that quant is likely to hold out. But again, anything in crypto can happen. But for now, at the point of recording this video, it looks like quant's bottom is in, and it shouldn't really have to come in any deeper than $40. But there are some areas of good support that we need to be very mindful of, and I'll draw those in right in here, and I'm going to draw it straight across. You can see that we're right in it right now. Okay, so this is the area. It's basically between $84 and $94.9. This is previous resistance that was then, previous support that was lost. We moved up and we turned it into support. If you lose this area, then we have got deeper in price action to go, right? It's obvious that if we lose support, we're going to have to go down deeper. But at the moment, this is the area of demand. Now, we can see on the weekly chart, we're also in the oversold area. The monthly is oversold. The daily is oversold, right? We aren't ready to say that we're bottomed out yet, because I don't think we are there. We haven't bottomed out in terms of the most recent lows, but we can experience that this area of demand might be still a really good, strong area of support for quant. And so here we are likely to see a bounce to the upside. Now, if we were to try to trade this, obviously I would be trading on BitGet, and the link for BitGet is in the description down below. It's a fantastic platform. I use it for 100% of my leverage positions and 90 to 95% of my spot positions. So if I was to trade this is how I would approach it. I would basically be looking at around that kind of $90 for a long position, and I would put my stop loss below this area here for the support. So that would essentially be approximately $82. And then I would be looking to go long, and I'll be looking at the next area of kind of major support and resistance, which will kind of put me right about $126. And I would be looking at this. I mean, we potentially could even just say 50 EMA, and we'll still get a very, very tidy risk reward ratio, about 3.06. So there's some good profit to be made here. And that would be approximately a 27% move if we were just targeting out the 50 EMA on the weekly time frame. This would be something that would take quite some time to play out. It wouldn't be instantaneous gains or anything like that. You'd have to be very patient, let it play its course and all those kind of things. But a move to the 50 EMA from this area of support could be something that we could see, and again would have good risk management with it. So that's my approach to it. So yeah, that would be wrapping up this video, I think. So if you found it useful and informative, smash the like button. Do appreciate that. If you are new to the channel, why not go ahead and subscribe and join us in Discord. Let's continue the conversation down there. It's completely free, linked in the description below. Until the next one though, guys, have a fantastic day.